What can you purchase with a VA home loan? I get this question all the time, and my favorite one, which is something that I would love to do, is can you purchase an RV with a VA home loan? The short answer to that is no. And another good one we get is can you use your VA home loan to purchase a property overseas? That is, you cannot. You can only use it within the US and its territory. So today we're going to break down the type of properties that you can purchase and what actually goes into purchasing these properties. So, the first one we're going to start off with, which is kind of the one that most people go with, is a single family home, right? This includes attached and detached single family properties. This is also going to include fee simple versus what's called a leasehold. Now, fee simple is where you own the property and the land. Sometimes there could be some deed restrictions, but typically you own that property free and clear, minus any kind of mortgages. Then there's also leasehold properties. Now, this is when you actually lease land from someone else, even though you have a home on that property. It's kind of strange. We really don't run into many of those, but there's definitely circumstances where people do run into that. Just note that the VA does allow for them, but they do require special approval. Now, when it comes to buying a new construction property, there's two ways that you can do it. One, you go to a builder that's already building homes, like there's plenty of big builders that are out there, and you say, well, I want to purchase this property. And then what they'll do is they will put the whole contract together. They'll pay for all the they pay for all the financing, the construction, all of that. You just come in and purchase the property right from them. That's a pretty easy process. Builders that are doing this typically already have VA approval to do that, which also makes things much simpler, but it is a very easy process to do. So if that does come up, don't be surprised and just go through that process. The other thing is they typically will also offer at least a 1 year warranty up to 10 years. Now there is circumstances where they don't offer warranties, which is not a problem because the VA can grant an exception for that. But just note that you really want to be able to get that warranty with the property in the event something goes wrong. And things do go wrong, especially within the first year when you have settlement within a property. The other way you can do it is by actually getting a straight up VA construction loan. That's where you're going to be able to purchase the land and do the construction in one shot. And no, you cannot use the VA loan just to purchase land on its own. It has to be a combination of a land loan, it's a construction and land loan put together. Now, for these types of properties, you definitely need to do your homework ahead of time. And because once you close it, you kind of go right into it. So you're going to definitely have some upfront costs. And it's a two-time close as well. Banks use their funds to do the financing. Typically, it's 100% financing, and then you kind of refinance into a VA loan, and then you have that benefit. So, and also the credit requirements, and they have DTI requirements, overlays on that because they are doing 100% financing. So just kind of keep that in mind. You can also do renovation loans on the properties. We're actually all of them that we're going to be talking about. So it's just something else to keep in mind. If the home is not perfect, then you could do those type of renovation loans on the property. But just do note that the interest rates typically are going to be higher on those programs, and they also limit you to what you can do versus, let's say, like a home possible program from a conventional standpoint. Now, let's talk about townhomes. That's typically going to be either like a subdivision that you're going to drive into, like Lake in the Hills, and they're going to have a whole bunch of properties, and they have an HOA due. Now, that's not going to be considered a condo, right? It's a detached single family property, but it's not quite a condo. It's called a planned unit development. And typically, when you see row homes, people will always associate those with, oh, this is a townhome. But in financing, townhomes do not exist. Either it's a attached single family home or detached, it's a planned unit development, or it's a condo. And yes, there's single family condos that exist out there. I've almost purchased a property in one, and we come across them as we do mortgages across the country. Another thing to keep in mind too when I mention condos is that they do require VA condo approval. It is definitely an easy process to get condo VA approved. Even if it's denied or going to get denied, you can easily do it. We just did a whole video on that, so check out the channel. Also, you can purchase multifamily properties up to 4 units, yes, plus a commercial space. And if you have more, if you have a joint home loan application, you can have more units, like 6 units, plus a commercial space or two. So we did a video not too long ago on that as well. So in fact, smash that like and subscribe button so you guys can get more content like this. We're doing tons of videos around just housing benefits and how they work and how you can leverage them to position yourself in a much better spot. Now, the cool part with multifamilies is that you can use prospective income on the other units to qualify for the mortgage. So typically, you're going to qualify for a lot more with a multifamily property. Now, the caveat is that you need 6 months of reserves. That could be either 401k, TSP account, liquid account. It cannot be gift funds. Lenders look at the last 2 months of bank statements in order to verify you didn't get gift funds from anybody. So if you're listening, understand how that piece works. But after 2 months, it counts as your reserves. And the other thing is that you will have to hire a property management company to manage it. Now, the lenders don't check after you close if you keep them. Otherwise, you need 2 years of taxable property management experience, like owning an investment property, in order not to hire a property management company. So that's just kind of a nuance. The other type of property you can purchase is a manufactured home. Now, this must be classified as real estate and it must be fixed to the foundation. Another good one is modular homes. This includes modular on-frame housing, must meet all state and local building codes. All the running gear needs to be removed, and the crawl space needs to be covered by a vapor barrier. So there's some of the small things that need to happen. Another one, which I think is a fun one, is you can use your VA loan to purchase a farm residence. Now, the tricky part with this is because I've run into people that have done it, and then we've looked at doing them as well for people. But what happens is that the non-residential value of a farmland in excess of the home site doesn't count as value towards the property. So that's where it just gets really tricky. You're looking at 200 acres with a 2,000 square foot home. That 200 acres is worth more than the house. Now you start running into issues. Now, if you're looking at those types of properties and let's say the VA loan isn't the best option, then you might be looking at a USDA loan in order to do that. But we've definitely had high success with people buying, let's say, 50-acre properties and being able to use the VA loan, no problem. I mean, it's a full-out farm, not a problem. Now, there's some other things that you want to consider. Now, we talked about doing renovation loans. Yes, that's a great option if you want to purchase a property and it needs some work. Typically, they go up to $50,000, but there's lenders that do them that are above that. Typically, you're going to have to finish them within a 4 to 6 month time frame. And then every lender is going to have a different requirement for those just because they are very tricky. Like you need HUD consultants. It's similar to a 203k loan, which again, like you have to hire other people. They have to get approved to do it. You can't do the work yourself. So you're not really saving too much money. And we've seen people walk away from job sites with $36,000 doing zero work and nothing happens to the contractor. It's mind-blowing when it comes to that, okay? Another key thing that you want to consider with the VA condo approvals is that the VA condo approval is for life of a loan. So the thing is that you really need to understand the finances of a condo when you're going into it because you can't trust that VA approval. Now, with all that being said, all properties must meet the VA's minimum property requirements. It's in Chapter 12 of the VA handbook. It outlines all the things that the property needs to have. And no, VA condos, VA properties do not need air conditioning. They just need heating, which I found pretty interesting. And I actually learned that myself when I was purchasing my place because it doesn't have air conditioning, but we're doing a renovation. And so, that's, I guess, the VA loan also gets a bad rep around, well, the home needs to be in perfect condition. No, it doesn't. It just needs to be functional. That's going to be the key issue. And you don't have safety issues because you can also always defer any type of things that the VA requires. to be able to do it after you take ownership of the property. So kind of keep that in mind. And also, I'm going to go over just a couple of things that the VA doesn't allow that fall within the categories that we just talked about. So, if you're actually in a lava flow zone 1 or 2, the VA you can't get a VA loan in that area. If you're in an airport clear zone as well, if you're in a special flood hazard area where flood insurance is not available, you cannot use your VA home loan. Also, but you are allowed to. I should have mentioned this with the allowed piece. So I'm sorry about that. Is that you are allowed legal non-conforming use properties as long as they meet the requirement. Now let's get back to what you can't do. You can't do Condo-Tels, right? That's they're popular in New York. They don't have an HOA and they're not eligible for a VA loan. You can't do co-ops either. You won't be able to do those. Also, properties that do not comply with current zoning regulations are not going to be able to utilize the VA home loan. So you definitely want to do some research when you're going into this process. So hopefully you guys got some good information out of this. Hit the like and subscribe button. You guys got questions, comments, drop them in the section. I'll create videos around your questions. That way you guys can get educated and make the right decisions when it comes to real estate. Talk to you guys soon.